As the crypto market continues to grow in market cap, it's vitally important that you understand how to mitigate risk in this scenario, right? So we're having high volatility towards the upside, and along with this, you also have high volatility towards the downside. That's why insurance plays like InsurAce are really, really important to develop your portfolio. And the interesting thing here is this is not a concept. This is something that's actually actively available to anyone in the DeFi space. So you can actually see here, you can buy covers on all these different platforms, on SushiSwap, on MCDEX, on Curve, Aave, Banky, right? A lot of these kind of innovative platforms. And what I'm interested in is as Cardano continues to develop their smart contracts, as Avalanche does, as Solana does, as Phantom does, right? So with all these different projects, it's new. They're experimental. For example, with Polkadot, that's why they're using Kusama. But with this, you always have a smart contract risk, right? So that's where we have the insurance plays actually coming out and developing. And yes, there are other options in the marketplace, but in my personal opinion, InsurAce does beat them all out in multiple different factors. And you can actually see this here on their docs. By the way, everything we talk about in this video will be linked down below in the description, but they lay this out quite nicely here in their comparison here, right? So Nexus Mutual is basically the top dog in this space. Just like if you're looking at the Oracle kind of category with crypto projects, you have Chainlink really leading that, right? Or like decentralized exchanges, Uniswap is really leading the charge there. Nexus Mutual has the highest market cap, while a lot of these other projects out there, besides InsurAce, have incredibly low market caps with lack of audits, where InsurAce has not only audits, but their market cap is pretty stable. And that's why I like the project. And it really hasn't bounced back yet like all these other ones have. So it's an interesting play as far as that goes. So you can see kind of when you're cross comparing all these, Nexus Mutual, you do need know your customer, right? So you do need to enter all those things. Here with InsurAce, you have really, really interesting pricing models. This is portfolio based. You actually get a nice discount when you're adding multiple different covers. So if you're here on their kind of a user interface, right? So let's say we want one for Banky. Let's say we're using SushiSwap V1 and Kyber. We're actually going to get a discount with that, which is quite interesting, right? So you can actually set the cover amounts here, and you can really base it all on your own portfolio and actually get a discount based on that, right? So this is kind of that interesting ability to have a tailored plan versus kind of, again, this blanket approach that we have with traditional insurance companies. And we still have even some projects in the crypto space that are taking this model and just copying and pasting it. I don't think those will win out in the end. I think the best projects like InsurAce in this space are going to make custom tailored plans for each individual, right? So you can even test it out today. Again, one of the reasons that I really love this is they're not promising all these things. They're not saying, hey, we're going to develop this. Hey, we're going to develop that. It's usable right now. You can actually see how it's used. It's very, very simple to pop in here. You can buy with cover reward, all these different things. And then, hey, maybe you're like, I only want Kyber. You can just select that one. Very, very simple user interface. I absolutely love that. But back to the comparison here, we're actually looking at the premium cost, right? So with something like Nexus Mutual, you have a 2.6 minimum and a 53% maximum. That is massive. Whereas Cover, you have a 20% minimum. That's crazy. And 130% maximum. I mean, that's pretty insane, right? Versus InsurAce. So lower than the per protocol cost combined. Really interesting, right? So then we have all these other things here. I don't want to bore you guys too much with this, but they are cross-chain covering and they do have investment products. I absolutely love that. They have the claim process, they have capital efficiency, and you're seeing a lot of issues here with some of the other projects. But again, I think it's important to definitely weigh all your options out there. I just kind of wanted to show you guys how this lines up. Now, to return back to the overall, like what is InsurAce doing? What are the kind of problems they're solving in the marketplace? And why is this so important? Well, you have a lot of accessibility issues out there. So you have things like high premiums. You have those KYC limitations you have with Nexus Mutual, for example. You have the cross-chain coverage, which InsurAce is actually coming in and solving. And then you have a lot of these underlying risks, right? So we talked about that concentration risk. So if you're betting it all on like Banky, for example, and they have a smart contract issue, like for example, Iron Finance had, right? Like I think earlier this year is when the Iron Finance issue happened with the stablecoin, where there's a lot of risk there, right? So if you're betting it all in there and you had an InsurAce cover for that, you were actually mitigating the risk, right? So that's one way to hedge against it. And especially if you're in a market that has a lot of development, things are changing so fastly, it's important to have insurance with something like this. So they also have product diversity. And then you have, so operational credit and market risk evaluation. And then besides that, another issue in the market is the capital inefficiency. So you have unsustainable investment return, low reserve utilization, and limited diversification opportunities, which is, again, a very, very important thing if you're just using a blanket insurance protocol, which is something that a lot of the other projects are doing out there. So This is basically how InsurAce fixes a lot of these. They have a zero premium. So how does that work? Well, it's portfolio-based product design in a unique pricing model to optimize cover costs together with sustainable investment returns and achieve an ultra-low premium cost to zero. So that's something that you don't see a lot of other projects doing. They also have liquidity mining, sustainable returns, and enriched product lines. So that's part of their KYC and portfolio-based product. So if we're looking here on the cards here, the options you have, you can see all these different things along with the security rating and the daily costs. So these daily costs are tiny, especially compared with some of those other ones. I mean, the maximum on some of those was up to 150%. You even have Pangolin on there, so that's a decentralized exchange on Avalanche. You have a Wi-Fi and Curve. You have Kyber, like we talked about, and a lot of these other ones out there pooled together. If you're using some of these, especially like Badger Finance in the yield farming space, you have a lot of risk, right? When a lot of these projects are promising high annual percentage rates, that's where you definitely want to at least have some sort of a cover, especially if you're sinking a large amount of capital in there. You should have a hedge on it, right? So just like you would have a hedge on, let's say you're going all in on a certain option, you kind of hedge against that in a certain way. And that's really what InsurAce allows you to do if you're looking at a different move in the DeFi space, right? So beyond that, you can see here their comparison, like we talked about. And then if we're looking at here, you can actually see why is this so important, right? So the number of DeFi projects is continually to grow. And one thing we covered in that daily DeFi series was the total value locked in decentralized finance has just gone exponential, right? When we started that series, it was like $10 billion. Now it's gone insane to over $100 billion. And that's just with DeFi pools. If you're looking at that tracking with DeFi Llama, they say it's closer to $200 billion locked in decentralized finance, which is quite interesting. And that's only going to continue to grow because if you see the developments and what's locked in centralized finance moving into that market, you have a lot of room, right? So a lot of room for the upside. You can see all the different things they have going on here. Let's go down here. You have a deficient product accessibility, so a high premium, especially for protocols with less stake pools. You have limited cover capacity, which often frustrates customers when they need to buy or cover their intending protocols, which is very frustrating at the end of the day. And then inadequate risk management and capital inefficiency, like we talked about in the beginning. But those are the main things that I see as far as InsurAce really coming into the space and solving these issues, right? And capital inefficiency is a giant one. As far as use cases go, you can see kind of all these different things. Again, I'll have everything linked down below. But you can see how this would lay out in the DeFi space with InsurAce and how you can actually buy a cover on these and, again, hedge your bet there. So beyond that, you can actually see Insure, which you can invest in, which is listed on 5 exchanges and actually available on 13 different platforms. So you have you can do your full audit yourself if you want on Etherscan, BSC Polyscan, and Avascan, which is also good to see. And then it's listed on all these main exchanges. Obviously, I would recommend using a decentralized exchange versus a centralized exchange like Huobi. And beyond that, you can actually see the data is available on all these other ones. So like DeFi Pulse, DeFi Llama, good to track the market there. Beyond that, this is a great way to stay up to date with them here at InsurAce. _IO. Again, that'll be linked down below in the description. And beyond that, if we're looking at the actual price action right here, we're looking at a daily volume of around $2 million. So this is not something obviously you'd want to trade. Obviously, you have to do your own research with this project and understand the risks associated. But the main thing here is it's mitigating risk. So that's a huge move in the market. And on the daily, it's down a bit, so 21%. But again, this is something where you would actually be using the token. It's a utility token. It's not necessarily something that you're going, hey, I'm going to trade this day in, day out. That's not a good move. We're looking at $1.62, market cap close to $18 million, $18.2 million right around there. And we've had a slow decline. So like I said, this one hasn't picked up like the rest of the market. And that's why I find it's an interesting play. So if you have any questions on InsurAce, just let us know down below in the comments or join the Telegram group. That's all for this one, Invest Global. Until next time.